Shares of Trent fall as much as 7% as the company warns of slowing growth at its annual general meeting and tells the exchanges that the first quarter revenue grew by 20%. Nuvama has downgraded the stock to hold with a revised target of 58.84 rupees.
Capital market players, BSE, Nuvama, Angel One and Motilal Oswal trade sharply lower as market regulator SEBI bars US trading firm Jane Street Group from accessing the local security market. Additionally, Angel One's gross client acquisition for the month of June falls 41%.
On the way up, we have Bajaj Finance trading with gains as the company has reported a 25% year-on-year increase in assets under management, approximately 4.4 lakh crores in its first quarter business update. The customer base too has grown by 21%.
Marico reports consolidated year-on-year revenue growth in the low 20s for the first quarter of FY26, supported by a strong volume trajectory in India business and double-digit growth in international markets.
Defence stocks, they are abuzz in today's trading session as the Defence Acquisition Council has cleared capital acquisition proposals worth nearly 1 lakh crore rupees. The nation's military seeks to onboard new defence equipment. You're watching us here on Chartbusters. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Vinny Motiwala. You know, if you looked at the first hour of the market and just the index, you would be saying that, okay, there's nothing which is happening. It's a slow Friday morning. But tell you what, beneath the surface, a lot is moving in either direction. Even if you look at the Nifty, we spoke about Trent on the way down. We spoke about Bajaj Finance on the way up. The broader markets, we have 1,600 stocks advancing for about 895, which are declining. So much happened. Yet on the index, we don't have much to show for. A lot of stocks in focus.
Absolutely. A lot of individual stocks in focus. Q1 updates that are coming in as well. News flow updates that are coming in as well. Among the top sectoral gainer today, let's just keep an eye out on some of these real estate names. Nifty Realty among the top sectoral gainer. Pharma is managing to hold on to gains today as well. So Nifty Pharma, 0.7% of gain up is what we're watching out for right now. So that is something interesting to watch out for. While on the downside, we have Nifty Auto as well as metals that is not doing well. So that's how we're seeing in terms of the moves coming in sector-wise as well, but a lot that's happening on the broader end of the market because that's where the outperformance is coming in as well. But on that note, let's welcome Manas Jaiswal also of manasjaiswal.com for a technical check on the market as well. Manas, good morning and thank you so much for joining in with us. Nifty as of today and as of now, 25,400. How important is that level going to be now? And if we close below that mark, then what are we watching out for?
See, good morning. See, Nifty is correcting, but it is still trading above 10 and 22 moving average. Until Nifty is trading above 25,200, which is its 22 moving average, I'm not worried. I think the main trend is positive. So if you're long in this market, you can definitely hold it. Keep your stop loss below 25,200. However, if you want to create fresh long, then I think you should wait for a breakout. If Nifty breaks 25,600, then you can go long aggressively in the market because after that you can see almost 400 to 500 points rally on Nifty. So I'm still bullish and I think long position can be held with a stop loss of 25,200.
All right, we take that point, stay long. As we speak, a bunch of these broader market stocks are spiking. We have Z Entertainment, which is now moved to the high point of trade. It's a 5% up move and a large part of that has come by in just the last few minutes. There was a brokerage note where the management has laid out some medium to long-term targets. Remember, the company's promoters are issuing some warrants to themselves as well at around 133. So we'll keep an eye out on Z. The other one is Godrej Industries. We spoke to the management yesterday. They did guide for nearly 2,000 plus crore worth of additional sales on the back of capex that they're doing. Higher share of revenue coming in from the specialty chemicals, which would positively impact their margins. The street's taking note of that as well. That stock up nearly 6%. Manas, individual stocks, are you playing on the long side since your tilt is bullish?
Good morning, Mangalam. So I think, yes, you can create some long position in strong names, especially pharma names, because many pharma stocks are looking strong on the charts, especially Lupin, where the stock has given a confirmation of higher tops and higher bottoms, and it is trading above 200 moving average. So I think in Lupin, one can create long position. Stop loss should be around 1970, and here the target would be around 2030. And second is a Biocon MGL, where stock has given a flag pattern breakout, and the stock has been making higher tops and higher bottoms from the level of around 1300. So here also one can create long position. Stop loss should be around 1520 and target would be around 1600.
Okay, keeping an eye out on those levels over there. But in terms of today, some of these volume movers, we're seeing even Sapphire that is buzzing in trade, or Devyani International. Anything you're looking at over there also on the technical front?
In Devyani, I think stock has been taking support near 160, 165 for quite some time. Now, since stock has broken its 200 moving average, you can take a trade here on the long side. Take a long position here. Stop loss should be around 168. However, on high level near 185 to 190, I think you should book profit in Devyani.
Okay, book profit in Devyani is what you're saying. But let's shift focus now. And Manas, thank you so much for joining in with us. We're going to shift focus to our special segment now, where we will get you a few ideas of profit from Money Control Pro. Jitendra Gupta, Money Control of moneycontrol.com, is joining in with us to talk to us about the stock that he's tracking closely. Jitendra?
Hi, thanks. KEC International, a leading player in power T&D, is navigating through a mixed execution cycle while headwinds in non-T&D business is easing. Its core T&D business is expected to propel growth, supported by strong 33,000 crore orders in hand. In Q4 FY25, KEC posted a healthy 12% year-on-year growth in revenue, and that was driven by strong execution in T&D and cables business. EBITDA surged by 39% with margins expanded 110 basis points to 7.8%. This was supported by operational efficiency and better revenue mix. Management expects FY26 revenue to grow at 15% with EBITDA margins inching towards 8.5%. By FY27, margins are projected to exceed 9% on the back of strong profitability in T&D business. Importantly, 70% of the targeted 30,000 crore order inflows for FY26 is likely to come from T&D. Non-T&D verticals including civil, railways are also expected to see turnaround as KEC focuses on capital light, margin accretive projects. Of course, it will also focus on tighter working capital management. At about 20 times its FY27 estimated earnings, KEC is trading reasonably valued. It is reasonably valued given its strengthening fundamentals and improving margins profile. With execution challenges easing and non-core segments poised for recovery, stock present attractive re-rating opportunity.
All right, that's about KEC International. Just keep an eye out on Northern Arc as well from the broader markets. That stock is up around 8.5% here too. The management joined us on Tuesday. They said that they are targeting 22 to 25% AUM growth for this year. Along with that, they're looking at nearly 30-40 basis points NIMS expansion this year, another 40 basis points next year as well. So that would be an overall expansion of nearly 80 basis points in the next 2 years or so. The NIMS would cross double digit and sustain above that. On a 22 to 25% AUM growth, that stock continues to do well. Good updates coming in from the financial sector that has a further tailwind on all these names. Take a short break, but as we do that, let's tell you about CNBC-TV18 Prime, the all-new offering that we have, which brings you insights from policymakers, business leaders, economists, all of them shaping, both India and the world's future. CNBC-TV18 Prime decodes global shifts and decodes their impact on Indian businesses, which gives you unparalleled insights. You can tune into the channel CNBC-TV18 Prime at 12 noon for the global reset. Thereafter, we have at 1 p.m. the Big C, which is on commodities, crypto and currency. And then every evening, we have Global Lens at 8:30 p.m.
Welcome back to Chartbusters on CNBC TV18. Now let's shift focus and talk about an important news flow that came into today, and talking about few of those capital market players, namely BSE, Nuvama, Angel One, are trading lower, and this came in after the market regulator SEBI barred US trading firm Jane Street Group from accessing the local securities market. Now Hormaz is joining in with us to give us more details on this one. Hormaz, over to you.
Well, what is a Friday if it is not crazy? And the SEBI order on Jane Street has ensured that for all of us today. The market regulator has banned Jane Street and its group entities from accessing the capital markets in its interim order that was uploaded last evening on its website. Now, as per this order, Jane Street made unlawful gains to the tune of 4,843 crore rupees through trades between August of 2023 and May of 2025. This entire amount will now be impounded, the largest in India's capital market history. SEBI has ordered that this impounded sum will have to be deposited in an escrow account which can be opened in any scheduled commercial bank, and that no debit will be made without prior permission from the market regulator. Now, Jane Street has been given 3 months to square off or close any of their existing positions or until the expiry of such positions, whichever happens earlier. Now, this matter goes back to July of last year when SEBI, the market regulator, had asked the National Stock Exchange or NSE to examine the trading activities of Jane Street to ascertain any market abuse. The report for this was submitted by the exchange in November of last year. Now, a month later, SEBI discovered that certain entities were running the largest risks in cash equivalent terms, mostly on expiry day. Now, cash equivalent in F&O terminology is liquid instruments that is easily convertible to cash, which can then be used as collateral to trade. Now, in February of this year, SEBI found prima facie that Jane Street was engaged in activities which were in violation of the regulator's PFUTP or Prevention of Fraudulent and Unfair Trade Practices regulations. As a result, SEBI asked the NSE to send Jane Street a letter of caution to dissuade them from taking any positions that could be manipulative in nature. However, the regulator found in May this year that Jane Street was in complete disregard of the caution letter and still running large cash equivalent positions, which was not only a violation of their regulations but also their own undertakings that Jane Street had given to the regulator. And it is this what led to the issue of the order last evening. That's not all. Last year, SEBI had put out a study stating that 9 out of every 10 retail traders lose money in the F&O space. How much did Jane Street earn? Not one, not two, but 36,500 crore rupees between January of 2023 and March of 2025. But what is Jane Street? Now, a global proprietary trading firm, 2,600 employees across the US, Europe and Asia, uses algorithms to identify trading opportunities in the market, and it's trading in over 45 countries. Now, does this order bring us to the end of this issue? Well, not yet, because Jane Street has contested the findings of the SEBI interim order and will be reaching out to the regulator regarding this. So it's only part one that has come to an end. We'll await to see more as the events unfold.
All right, Hormaz, thanks a lot for that. We will definitely keep an eye out on this story. But before we move on, SEBI tells CNBC-TV18 that Jane Street was the largest position in the Nifty bank options market, and fear of manipulation from other similar players may not be that much. They've added that no more similar investigation or orders like Jane Street is expected, but they do remain on the lookout for newer risks, if any, emerge. So we'll watch out for how this plays out. For now, Jane Street is the isolated problem that SEBI has acknowledged, with no other problems coming in from other similar players. We're also keeping an eye on a couple of these consumer names. The biggest loser on the Nifty today is Trent, and that's because the company has given its first quarter update, where the revenue for the company has grown just by 20%. So the reported revenue is a little over 5,060 crores. Why is this a concern, and why is the stock down 7% on the back of that? Because Trent's own history, the last 5 years, revenue has compounded by almost 35%. In fact, very recently, the company itself said that, the business will grow upwards of 25% on a sustainable compounded annual growth rate basis. And as a result of which, the street had made its expectations to that extent. And now, because the first quarter, for whatever reason, has grown at 20%, the street has had to cut their estimates for FY26 and FY27 as well. Nuvama, for one, has cut their, this year's estimate by 9 to 12% on the EBITDA, a little lower on the revenue front as well. And that takes their target price lower from 6,600 earlier to around 5,800 odd thereabouts. They've downgraded the stock to hold. Stock, which had already seen a rally from the lows of around 4,500 all the way up to 6,000, is now correcting post this first quarter update. On the way up, however, we have Marico, which is higher by about 2.5%. That on the back of their first quarter update. They've said that, consumer sentiment has been fairly good when it comes to rural, and even urban has shown steady improvement, on the back of which their India volumes have actually been a multi-quarter high when it comes to growth, and that's led by value-added hair oil. And that to me is the biggest positive, because value-added hair oil was subdued and under pressure for the last 8 quarters, if I remember correctly. This growing in double digits is telling you that consumer sentiment indeed at the broader end is picking up. We've seen their international business perform well as well. So add all of this together with the increase that we've seen in oil prices, their revenue growth has been in low 20s. What's the only reason which is keeping the stock from rallying a lot more is the gross margin, because gross margin pressure, they believe, continues. They expect it to ease out in the second half, but EBITDA margins will see a compression. Operating profit will not grow as much as the revenue has grown. They'll only show a moderate increase, which is why the gains on the stock at one point were up 4%, but now has moderated to just about 1.8%.
So moderating operating profits, or modest operating profit growth, is something that is keeping the stock from the day's highest point, and we're seeing it just with a uptick of 2% as of now approximately. But a slew of other updates that came in from the banking and financial space as well. Gaurav is joining in with us to give us details on Bajaj Finance, Bajaj Housing Finance, Credit Access also among the names coming in. Gaurav, over to you.
Let's talk about Bajaj Finance, because a good set of numbers is what we saw from the company. In fact, it was actually a positive surprise for investors, because AUM growth was at around 6% on a sequential basis, which also results into 25% growth on a year-on-year basis. Now, let's not forget that customer base has also increased almost in the tune of 21% on a year-on-year basis. And after that, now brokerages are also being a little bullish. What they're saying is that asset quality is the next checkpoint for the company, because loan book growth has been strong. When we talk about Bajaj Housing Finance, there also we have seen a similar trend. The AUM growth has been at around 24%, with the disbursement growing somewhere in the tune of around 22% on a year-on-year basis. Now let's also focus on Credit Access Grameen. A good set of numbers is what we saw from the company in terms of the asset quality for this quarter's update. When we look at the overall disbursements, or rather gross loan portfolio, there was a little muted performance, and this was because of the write-offs worth 690 crore rupees. But if we exclude that, the gross loan portfolio increased almost by 3% on a sequential basis. What remains positive for this company is the asset quality, because when we look at the PAR 90 days product and its overall ratio, it has come down almost by 100 basis point. PAR 0 days portfolio has also come down almost by 100 basis point on a sequential basis. And at the same time, let's also not forget that for FY26, company has said that they will be growing their AUM somewhere in the range of 14 to 18%. And the disbursements have also been strong as per company's overall management commentary. So definitely on the back of this, we are seeing some uptick in this counter and a positive number as well coming up from the company.
Okay, Gaurav, thank you so much for that. But on that note, we're actually going to slip into a very short break. But here's some good news coming in for our viewers, as India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store, Google Play Store, or you can just scan the QR code on your screens.
Welcome back. Let's talk about the Jane Street story itself. We do have Yash joining in shortly to tell us about what SEBI has said to CNBC TV18. But meanwhile, just keep an eye out on the defense stocks. They're buzzing. The Defense Ministry has cleared 10 proposals to buy weapon systems and military equipment worth nearly 1 lakh crores. Which stocks benefit from this? Ria joins in with more.
Well, yes, Mangalam, yesterday the DSE has approved 10 capital acquisition proposals worth over rupees 1 lakh crores. So let's take a look at the large projects and the likely beneficiaries of the same. The first one is the QRSAM order, which is the order value is expected at about rupees 30,000 crores, and BEL, which is Bharat Electronics, is expected to be the lead integrator for this. Of this, 40% of this order will go to Bharat Dynamics for the production of missiles, which comes out to be about rupees 12 to 13,000 crores. Two other other companies, Apollo Micro and Astra Micro, are also expected to get smaller orders for components and subsystems for this order. Coming to the MCMVs, which is the mine countermeasure vessels, 12 units of these have likely been approved at an estimated cost of about rupees 44,000 crores. All three shipyards, which is Mazagon Dock, Cochin Shipyard and GRSE, are expected to bid for this tender, and the order may likely be split between the two lowest bidders. Some other projects that have been cleared yesterday, the armored recovery vehicles, the estimated value for this one is about rupees 10 to 14,000 crores, and BEML and Bharat Forge are the likely beneficiaries for this. Some other projects have also been cleared, moored mines, electronic warfare systems, integrated common inventory management systems, and super rapid gun mounts have also been cleared yesterday, and the likely beneficiaries for these are also BHEL, BEL, Data Patterns, Astra Micro and Apollo Micro. So on the back of this, all of these defense stocks have been trading higher in today's session.
Okay, Ria, thank you so much for that. We'll keep an eye out on all those defense names. But with that, we are going to wind down this edition of Chartbusters on CNBC TV18. Thank you so much from Mangalam, myself, as well as the team who put this show together. Leaving the Nifty at 25,420. But don't go anywhere. The trading hour up next to take you through all that market action.